Now, WDV being 50,000. Calculate the depreciation for the second year. For the 50, you have to calculate 23.08 percentage. If you apply 65,000, 23.08 percentage on 65,000 because it remains constant, we'll apply the rate of depreciation only on the original value. That's why it is called depreciation under original cost method. Otherwise, it's named as straight line method. Why do I call that being the straight line method? Is very simple. The depreciation charged in the P&L account year on year is equal. That's what about the logic behind. So for the second year, the depreciation being 50, if I subtract the 50,000 rupees, then the WDV for the second year being 35,000. 35,000. Is that okay? I usually use the subscripts with the numbers 1, 2, 0, whatever it may be, it represents the year. WDV in subscripts, I used 2. It represents the WDV by the end of second year. By the end of second year. Is that clear? Hope you could understand. Now let's go for the third year. Depreciation for the third year, it remains the same, right? So 15,000 because we are going to calculate the depreciation on the original value only. WDV for the third year being 20,000. And I have to depreciate for the fourth year. That year also the amount of depreciation remains the same, 15. The balance value will be WDV by the end of fourth year. The WDV value may otherwise be called as book value because the value at which it is going to be recorded is called book value. Usually the asset will appear in the balance sheet at this value, WDV value. So you don't get confused with the terms book value and WDV, both are same, 5,000 rupees. Now get back to the question here. In this question, by the end of fourth year, it is sold for 10,000 rupees. As per my books, it shows only 5,000 rupees but sold for 10,000. What does it mean? I gained 5,000 rupees because of that sale by the end of fifth year. Okay. So sale value being 10,000 rupees, then the difference between these two is nothing but profit on sale. We have already seen the journal entries in detail, how to handle the case of sale of the assets either in profit or loss also, right? Let's now move on to the next pattern or method of depreciation, which is nothing but WDV method. Under WDV method, the rate of depreciation is 47.34. I am going to use that here. 47.34. Come on, join with me in answering this. The original value in this case is also 65,000 rupees. 65,000 rupees. Now you have to provide the depreciation under 65,000 at the rate of 47.34%. Come on. What is the value you are getting in the very first year? Yes. Yeah, come on, tell me. You have to tell me the answer. Is that 30,771? So 30,771. Always work out along with me. Don't waste your time. Be active. From the 65,000 rupees, if you are subtracting the 30,771, the WDV by the end of first year being 34,229. See, listening my lecture without any active participation will lead to drowsiness and sleepiness. Okay. Do some gimmicks with the numbers, at least make your hands active. And depreciation for the second year, here I am going to provide the depreciation at the rate of 47.34% on what? 47.3% on what? WDV. That's a, see, you should not get confused with this WDV and this WDV. This is WDV written down value method of depreciation. Under written down value of method of depreciation, the rate of depreciation is going to be applied on written down value. Under original cost method of depreciation, the rate of depreciation is applied on original cost. That's all. On original cost. If you are calculating the depreciation based on the original cost year after year, then it is called original cost of depreciation. Under SLM method, WDV method, we are going to calculate the depreciation based on the WDV applicable for that year. 34,229 for that 47.34% is supposed to be calculated, and then this value being 16,204. And after the depreciation, the WDV by the end of second year being 18,025. 18,025. Third year, you have to calculate again 47.34% on 18,025 to arrive the depreciation for the third year in the WDV method. Here the value being 8,533. 8,533. Cross verify whether this answer is correct. If you are calculating that in ahead, you can put that message in the chat box also. And the WDV after this being 9,492. Now you have to subtract the depreciation for the fourth year at the same rate, 47.34% on 9,492. This value being 4,492. It may be probably closer to this number, but I make it equal to this number to have the WDV being 5,000. This is rounding off error. There may be chances of rounding off error. It's not exactly 47.34. It is already rounded off. Because of the rounding off, that the scrap value by the end of fourth year may not be matching with the 5,000 rupees, but I can match it 5,000 rupees in such a way the depreciation for the fourth year is going to be adjusted here, right? Now this is sold for 10,000 rupees. Naturally, I gained around 5,000 rupees because of sale of the assets. Under WDV method or SLM method, whatever the method we follow, the WDV by the end of fourth year will be equal to the scrap value what we have assumed at the very beginning. Is that clear? Now, if you ask me which among these two methods the best, WDV or SLM method, predominantly we recommend only the WDV method. Okay, in WDV method, higher depreciation will be debited to the P&L account, lower depreciation debited in the P&L account later. In the initial stage, we debit huge money, later we debit lesser amount. The reason of debiting extra money in the beginning is it has lower depreciation or no maintenance cost. Year after year, it will increase its own maintenance and repair costs. So higher the depreciation and lower the depreciation in association with the higher repair cost in the later period will have equal amount of depreciation in the P&L account. You just think over, I am a car driver. Okay, you booked my car to come with me. Okay, see the depreciation already told you the objectives of depreciation to determine the cost. If I determine the cost this way, SLM method for my car, sir, the depreciation is 15,000 rupees. So I'll charge 15 rupees and my benefit 15 rupees. So I'll charge 30 rupees, sir. 30 rupees, sir. Then which car do you prefer to come? My car or the another friend who followed the WDV method? 30,771 rupees depreciation. He charges 31 rupees. 1,000. Assumed 15,000 is the depreciation. I assume this may be useful for 1,000 kilometers. That's how I assume. Then per kilometer it costs me 15 rupees depreciation as per SLM method. If I charge you 15 rupees depreciation and my charge and petrol charges there, so 30 rupees, you give me 30 rupees, sir, I'll come for driving. And another fellow says 31 plus my charges 15 rupees, sir, you pay me 46 rupees. Now tell me, to whom you choose, me or other friend? Here 30 rupees per kilometer driven, here 46 rupees per kilometer driven. Definitely you choose the 30 rupees cheaper, isn't it? Later period, in this case, few years later, the SLM method, this fellow charges again the same 30 rupees. This fellow charges only 15 plus, this is 4,492 for 1,000 kilometers, means he charges around 4.49 or 4.5, roughly 4 rupees 50 paise plus 15 rupees is petrol. So he charges 19 rupees 50 paise. This fellow charges 30 rupees. Whom do you select? First of all, you chosen me, and when the asset is becoming older, still I charge 30 rupees. If I tell you, sir, I am charging 30, that fellow charges only 19.5. The reason why I charge more is my assets are old one. What will you tell you? If it is old one, why do you charge more? If it is new one, why do you charge lesser? Logically, if it is a new one, you can charge more. Then they are happy. So the higher payment will be there in the case of WDV in the beginning when the asset is new. Lower amount is charged when it is oldest one. So if the asset are older, old car, you will be willing to pay old rate or lesser rate. New car, you will be willing to pay higher rate. Sir, 15 rupees, sir. Brand new, just now came from Showroom, sir. How much will you pay? 2 or 3 rupees extra also, take it. Sir, this is almost 5 years old, sir. Will run, sir. Sometimes it may have some trouble, sir. By the time you get down and push, sir, we'll go, sir. Get down and push. So what will you do then? I don't want to come to your car. So that's the reason the WDV method will be logically better and more favorable in price distribution. Okay, how? Very simple. Let's see here. In the case of WDV method, the depreciation will be 10,000 in the beginning, then gradually it is decreasing like this, 8,000, 6,000 and year on year. And when it comes for the SLM method, in the every year the rate of depreciation being the same 8,000 rupees, isn't it? Okay, the depreciation being same. But when it comes for the repairs, in the beginning year we don't have repairs. Second year we have repairs of 2,000 rupees. Third year we have the repairs of 4,000 rupees. Now what is the cost here under SLM method? 8,000 first year, second year 10,000, third year 12,000. But when you adapt the WDV method, yes, amount of depreciation is different. The repair is the same. In the very beginning we don't have the repair. First year end we have a repair of rupees 2,000. Second year we have a repair of 4,000 rupees. If we club these two, the overall value being 10,000 charged in the very first year for the assets depreciation and assets maintenance and repairs cost. Second year is also 10. Third year is also 10. Now, the cost of the assets utilized for the production or whatever it may be remains constant over the year under WDV method. Under SLM method, what happens in the very beginning, the cost may be lesser, in the later period the cost may be higher. So, if you are using the old one, it's costlier in the case of SLM. Okay, if you are using the new one, it's very cheaper. Then you prefer to use only newest one. If I am the business owner, sometimes later my asset will be only old one. No, how do I then manage the business? I cannot manage. So logically, between these two methods, WDV and SLM method, which is superior, means always WDV method is superior. And for the taxation purpose, while calculating the income for the tax calculations, predominantly they recommend only which method? They recommend only WDV method. Except a few cases, they suggest go for straight line method of depreciation. Most of the cases we depend on only is WDV method of depreciation. That's a superior one. Hope so you can understand the logic behind choosing these two methods. Now you may understand the formula also here, the calculation of rate of depreciation in the WDV method. So 1 minus nth root of S by O. You can easily understand that. There will not be any confusions. Now, how do I get that formula, sir? Is there any logic behind? It's out of the state. It's out of interest. You can understand this one also, right? Let's see the formula derivation here. How do I get the D? Understand that 0, 1, 2, nth year. I have an asset purchased at rupees, say, O value, original value. By the first year end, what happens? We might have subtracted the depreciation, right? How do I calculate the depreciation for the first year? Depreciation is nothing but O into rate of depreciation. Am I right? This is the amount of depreciation. D is nothing but what? Capital, original value. D is nothing, it's the amount of depreciation. Sorry, D is the amount of depreciation. O is the original value. And either O or sometimes WDV. Most of the cases is WDV only, no? Okay, in the case of WDV method, we are going to depreciate only based on the WDV value. So, amount of depreciation is equal to value of the assets into rate of depreciation. The rate of depreciation is represented as small d, already explained here. So, the D, small d represents rate of depreciation. Year after year, the depreciation is calculated based on the original value multiplied with the rate of depreciation. That's how we get the depreciation. Is that okay? So, from the original value, I am going to subtract O into D. I will get the first year value. That's how it will be subtracted year after year. By the end of nth period, this will be only scrap. Scrap value may be 5,000 rupees. Let's now put that in notations here. scrap value by the end of first year. Either it may be scrap value or WDV value. Okay, I use the term S represents year end value. So the year end value, first year end, the value of the asset is nothing but original value of the asset minus depreciation. Minus depreciation, amount of depreciation. How do you get the amount of depreciation? The method of getting the amount of depreciation is nothing but original value into rate of depreciation. Is that okay? O minus O into D. So whatever the calculations we have done already is now represented in fraction, means notations. O is equal to, so S is equal to O minus O into D. Here O minus OD, where in these two terms O is common, that O can be taken out. The O can be taken out. If I take out that O, then the formula becomes this way. O into, come on, tell me, 1 minus D. So if I take the O outside, don't panic if you are being non-mathematical students. It's very simple. O minus OD, where I am taking O out means, you take the O out, okay, take the O out. This O is divided by O. Then open the bracket. This O is divided by O is nothing but 1. This O into D is divided by O. Then the ultimate answer being D. So minus D. Okay. So that is the logic we get this. Okay. I am dividing that O minus O into D using the O, so that I will get this answer. Now if you multiply inside, you will get the same answer. O into 1, O into D, OD. You will get this one. Either you can go from there to here to there, or there to here also will work here. So these are the algebraic expressions. Seems to be confusing, but at least a basic you need to understand. These are the terms are going to be utilized in most of the cases, right? You can understand this. So scrap by the end of first year being O into 1 minus D. Scrap by the end of second year, what could be the answer? Scrap by the end of second year is nothing but O into 1 minus D. What is this? This is nothing but S1. It's nothing but WDV by the end of first year. WDV by the end of first year. From there, again I am going to subtract the depreciation. How do I calculate? This is nothing but what? WDV by the end of first year. This is nothing but WDV by the end of first year. Second year, WDV by the end of first year minus WDV by the end of first year, which is O into 1 minus D. And with that, you have to calculate the depreciation. You have to calculate the depreciation. I am applying the depreciation here. And again, we get the two term where O into 1 minus D is common. That can be taken out. So, O into 1 minus D, okay, into 1 minus D. O into 1 minus D into 1 minus D. This can be rewritten this way, O into 1 minus D to the power 2. If scrap by the end of first year means it's O into 1 minus D to the power 1. For the second year, the same formula exists, but power only changes. From this, it is very clear. Sn or scrap value by the end of the life, fourth year end, the value will be O into 1 minus D to the power n is the formula. That's all. This is the simplest formula here. You have to understand. Now tell me, you can get the S right away. You can get this S right away. You can get the S right away. For example, here the S for the third year is how much? 9,492. What is the formula for calculating S? S for the third year is equal to S for the third year is equal to O into 1 minus D to the power 3. O being 65,000 into 1 minus D is how much? 47.34%. I can represent that being 0.4734 to the power 3. Come on, get me this value. How do I calculate the value of this bracket? Yeah. Okay. See, you are using the non-scientific calculator. 1 minus 0.4734. Okay. So the value in the bracket is 0.5266. To the power 3 means you have to put into equal. If you put into equal, this is power 2. Power 2. Is that okay? Again, into 0.5266. So this is the ultimate value. 0.1460 will be the value here. Okay. 1 minus this value to the power 3, no. This second part, this part is 1.1460. 65,000 into, yeah, 65,000 into 0.146. 0.146. Come on, multiply these two. Are you able to get 9,492? Yes or no? See, so simple. Under WDV method, if you want to calculate the scrap value by that of 5th year or 6th year, you can directly calculate using this formula. Scrap value is equal to original value into 1 minus d to the power 3. Now, if you are using non-scientific calculator, I will tell you the shortcut here. For the power calculation, I don't know whether will I be able to get the same format in computer laptop, calculator, but it will work in your non-scientific calculator. Do this. See, 1 minus 0.04734. Okay, 4734. Power 3, how do I calculate? See, put into in your non-scientific calculator, and press equal. You will get power 2. Again press equal, you will get the power 3. Yeah, of course I am getting here also. This is a shortcut. For any power calculation, put the value, use the multiplication symbol and put the equal sign to the number of times you want to get. If power 10 means, what do you have to do? In the case of non-scientific calculator, okay, 0.25. I want to calculate the power 10 of this. 0.25 to the power 5 times. Okay, 5 times. 5 times or 10 times. I will assume the power being 5. 0.25 to the power 5. Just to put into and press equal, this is power 2. Again press equal, power 3, 4, 5. That's all. That's how you can calculate easily. Are you able to get this in your calculator? Yes or no? This is how you can get the calculator operations also. That's why I tell you, use the non-scientific calculator, get familiar with these usages, right? In subsequent classes, I will use more intensively the calculators, right? Now, scrap value under WDV value method can be easily calculated using this formula. Scrap value is equal to original value into 1 minus d to the power n. But what is my requirement? D is the requirement. I have to calculate D. Rate of depreciation is my intention. Then how do I get that one? It's very simple. 1 minus d to the power n is equivalent to, okay, S by O. S by O. That O goes to the next side. Otherwise, 1 minus d to the power n is nothing but what? That power n will go to the next side as root of n. So, nth root of S by O. Okay. I want d, right? So, minus d is equal to 1 goes to the next side. Here it's a plus 1 means automatically it's a minus 1 plus nth root of S by O, or I need d means d is nothing but d is equal to, that sign is changed. Minus sign is changed to plus d and minus 1 is changed to plus 1, plus sign is changed to minus, and that's how we'll get nth root of S by O. This is the formula for calculating rate of depreciation under WDV method. Now, for the examination, is it important to understand the derivation? Definitely not so. As I already told you, these derivation around, I will guide you around 8 to 10 different formulae this week. This 8 to 10 different formulae, if you are able to understand from the root at the foundation level, this will help you up to clearances of the professional exams. Be master with that. So, this is such a wonderful illustration and derivations you have to start with. Is that clear? Now, I have explained all, so I will finish up with one more example. With that, I will finish up this component. Okay. The another one is sum of the years digits method. Sum of the years digits method. This is also one of the methods we have. Okay. Under sum of the years digits method, we can calculate the amount of depreciation easily, almost similar to the WDV method. WDV method has some mathematical calculations. If I don't have the mathematical calculations and options like a scientific calculator, I need to compensate similar to that model in a normal calculations. That will be coming under sum of the years digits method. How many years the asset will work? 4 years. The life of the assets being 4. The life of the assets being 4. Now, sum of those 4 years. 1, 2, 3, 4. If you sum that, the value being 10. Okay. The value being 10. Clear. So year 1, 2, 3, 4. If you sum that, the sum of the years being 10. And the amount of depreciation in the very first year is, you have to rewrite this way, 4, 3, 2, 1. That's all. Okay, 4, 3. If the life of the asset being 5, 5, 4, 3, 2, 1. That's all. It means the overall depreciable amount should be apportioned in this ratio, 4 is to 3 is to 2 is to 1. Or 4 bar 10, 3 bar 10, 2 bar 10, 1 bar 10. If the sum of the years being, the life of the assets being 5 means you have to sum the 5 years. 15 will be the total. 1 plus 2 plus 3 plus 4 plus 5, 15 will be the total. The first year depreciation being 5 by 15. Second year depreciation being 4 by 15. That's how it will come. It's okay. This is called sum of the years digits method. So first year, the formula being depreciable amount into depreciable amount. That's how you can calculate. The depreciable amount here being 60,000. 65,000 rupees is the original value, scrap value being 5,000, then the depreciable value being 60. Okay. Then first year, 4 by 10 of 60, 24,000. Second year, 18,000. Third year, 12,000. Fourth year, 6,000. Is that okay? The depreciable amount being 60,000, divide that by 10 means per year it's per value being 6,000. For 4 times 24, for 3 times 18, for 2 times it's 12, and 1 time is 6,000. It resembles like what model? The WDV model. Higher depreciation in the beginning and lower depreciation in the later period. The same is now found out in some of the years digits method also, to compensate which method? WDV method. But of course, this is not so accurate as the WDV method. Anyhow, will depend on this in the case of the emergency. Sometimes this method also may be asked in the examination. So let's start with 65,000. The first year depreciation being how much? So we have already calculated the first year depreciation being 24,000. So I'm going to subtract the 24,000 from 65,000. 41,000. Second year depreciation being 18,000. Right. For each and every year, 6,000 is going to be reduced. So then the value being 23,000. The next year the depreciation being 12,000. Then it is 6,000, and the fourth year the depreciation, okay, 11,000, right? 11,000. The fourth year depreciation being 6,000. If I subtract, then the WDV value by the end of fourth year being 5,000. Sold for 10,000 rupees, you will get the same profit here. Hope so you could now understand the method of depreciation here. I have guided you the SLM method, WDV method, and some of the years digits method also. Not over, means in a nutshell manner, so detailed manner. You can understand the entire provisions, including the derivation of the WDV method also. Right? Come on, make a note of it.